Happy Thursday, everybody. Thanks so much for dropping by. We're going to talk about something that we find fascinating in the real estate business, and that's the economic cycles that we go through. I have certainly seen a few cycles, and my esteemed colleague and guest today is Rowena Patton. And before you get all excited, I want to tell you a little bit about her. She's wrote a best-selling book. She's had a top radio show in Western North Carolina for 12 years. And she automatically sounds intelligent because she's got this beautiful English accent, like she's educated in Oxford or something. So it's always intimidating when I talk to Rowena because she could be on TV because of that accent, I'm sure. So Rowena, I got to tell you, when we started talking about economic cycles, and then you told me about your economic cycle that you use a lot to help your sellers and to help people investing in real estate, I had really never heard of it. So I did a little bit of research on it. It's the Clement Juggler cycle, which we'll show in a few minutes. But I got to tell you, when I was doing that research, I must have seen 50 others. So tell me why you like this particular cycle so much, and tell me about your research into economic cycles.
I would be happy to. I'm going to share a screen right now to show you this, if I may. Mm-hmm. So here we are on the Clement Juggler economic cycle, and he developed this back in 1860, and people argue about who developed it. And it's, you know, in the late to mid 1800s, a bunch of guys, of course, in those times came up with the economic cycle and what it means. So just point A, the economic cycle is 7 to 11 years. That hasn't changed since 1860. Oh, wait, there's more. So no, that isn't quite true, because our last economic cycle, 2007 to 2023, put your hand up if you can do the math.
Yeah.
16 years. Right, so that is not 7 to 11 years. It was a very long cycle. What that tells me, given what we know about economic cycles, is that we're long overdue. Now, what does an economic cycle mean, and what's that got to do with housing? Housing cycles directly follow economic cycles. Why? Because when we get high interest rates, which is one of the first signs of, heck, we're in trouble with the economy, the government comes in and they raise interest rates. That's the number one thing you do to control inflation. So that's what's going on right now. We've all seen the rising interest rates. We've all seen where that's got buyers scared. If you're a buyer out there thinking about this, oh my goodness, like, oh, they're going up. Of course, what we always say is go ahead, buy it anyway, because you can refinance like we all did when the interest rates come down. It's not that much of a worry. And when you look at what you're paying to rent, or if you're not in the house you want, yes, we get it. So Clement Juggler set up this in 1860, French economist. And if we look at the last
physician too. I mean, I don't want to start you. He's a mathematician, and he was also a physician. Yes. He was a Frenchman, so they know everything to begin with.
Exactly. They know they're really called French fries. That's a whole other discussion. So here we are in the last two cycles, i.e. the one we're currently in, and the one that those of us who are old enough to remember, I think Marty and I know Carol and Mary as well. Thank you for being on today, and Daryl. You know, you will remember, or at least you've heard about what went on in 2007. It was actually when I got my real estate license, and everybody thought I was completely insane. Why am I getting into real estate? Because that's when it peaked. Anybody else get in around that time? But you know what went on. Raise your hand if you know what went on at that time. Yeah, there you go. Yeah, so everybody knows what went on around that time. So then, you know, I used to be a management consultant, so I've tracked media headlines that you can see on here. At the peak, just like about 6 months ago, right, this is the peak over here. Guess what? We just peaked. Somewhere around Christmas in most places in the country. Everybody's in euphoria. Those are the headlines that you read. Right? So the headlines are all about euphoria. Oh my goodness, this is my pension. Oh my goodness, I bought my house at 200,000 and now it's worth $1 million. That kind of thing. I bought my house in DC in 1996 for 220,000, 1997 maybe, and now it's worth 1.8 million. And no, I don't own that house anymore. So we all know what economic cycles do. So then we go into denial. Denial is where we're at right now. We've probably scooted a little bit from denial, and look over in 2007, what happened is in fear, right? So denial means, oh, I think my house is still going to keep going up in value. I'm looking at all these agents who are telling me, don't worry about the market. Dave Ramsey is saying the same thing. Oh, it's going to be fine. This is a different economic market. The fact that it's gone this way since 1860 is probably somewhat important in my little book. Like, actually, so this is a normal thing. Do they get shorter and longer? Absolutely. You can't define it by 7 to 11 years and run it out 100 years, because nobody can time it that way. Otherwise, we'd be billionaires. So then we go into panic further down to the bottom, and the bottom in most of our markets was 2010. Marti will corroborate this. We're in very different markets. I'm in little old Asheville, North Carolina. She's in big old Raleigh, North Carolina, one of the biggest markets in the country. And this happens all over the country. We all watch the national news and we hear how maybe we're going into a recession. However, you hear a lot of pundits saying, oh, the recession won't happen, don't worry about it. That would buck every trend since 1860. It doesn't make any sense, right? So our job as agents, and if you're listening as buyers and sellers, our job is to really educate you on what this means. So what are leading indicators? Political unrest. Do you think we have any of that right now? Who's getting indicted today? New buildings. Yeah, really. New building stats. Are they going down? Are they going up? Guess why? Because many builders have been around since that 2007, 2008 market that know that the recession is coming because they felt it before, and a lot of them went out of business, right? So new building stats are very important. Job reports. Can we even believe those anymore? I don't know. Days on market. Interest rate shifts. Oh, are we having any of those? Thank goodness we avoided one today. Shift in inventory. Oh my gosh, have we had a shift in inventory and it's going down, not up? Why? Because sellers are nervous that where will I go? That's where we can educate them about seller possession after closing.
Martha, help me. This just went dead. Present. It just went dead.
And all the other creative things that you can do as a seller on the market. Almost everywhere we're seeing price reductions. Bank restrictions. Are we seeing banks more restricted? I darn hope so, but I'm not seeing that right now. And GDP, gross domestic product. So those are the indicators, but forget all of that, because at this point we're all like nodding off because we don't want indicators about economic cycle. You just need to know 7 to 11 years. The last one's been 14 or 15, way too long. This is very natural, what is happening right now. Then as sellers say, and as a seller, if you're listening, you say, yeah, but my house has gone up 30%. Well, guess what? This piece over here, the last 2 years before the peak, is when you see the most increases. You'll see a 10% increase, a 20% increase, maybe even a 30% increase. So I think this is just going to keep going, says Mr. and Mrs. Seller. I understand, but this is very normal. Because last time around in 2007, most places, and we can talk about, you know, how the banks did it differently and everything else, but this is normal. Last time around, we saw prices drop from between 10% in markets that are very low and stable. Iowa is one of those. There aren't many in the country, to over 30%. Mine is a market where everybody says, oh, it's stable, no prices are going to drop. Not true. We dropped over 30%. Now, how do we drop 30% down here? That's because home prices rise 2 to 5% a year. Do they rise or drop 2 to 5%, you know, every year? No, absolutely not. That's why 2 years before the peak, you see these 10%, 20%, 30% rises. In the drop, you see it drop very quickly too, until it gets to what we call the trough. You're all familiar with the term recession. The top is called the peak. We peaked. Most markets peaked at Christmas. Now we're just, you know, working with sellers who are like, oh, I think it's worth that. I need to get it. I was just dipping my toe in the water anyway. The bottom's called the trough. Last time around, that was 2010. And guess what? We go back up to the peak again. So what does this mean? If you're a seller, hold the home for the price. That's okay. But the key thing here is, what's your age? right? If you're a 60-year-old seller right now, let's use 10 years as the cycle because it's easy math. If you're 60 years old, you're going to be 70 years old. You all need to help me with the math here. Am I right? 70 years old. We can all do that 10 years. 70 years old. Do you want to be moving at 70? Probably not. You're probably feeling like the classic here is baby boomers. What's the biggest demographic in this country? Baby boomers. You're 58 or up. Anybody have sellers who are, or buyers who are 58 and up? We all do, right? A lot of them because they're boomers. Most boomers, let's say the youngest ones are 58. So the 58-year-old family, do you think their kids have left home by now? Are they at college? Put your hand up if you think they're at college or they've left home. Or are they living at home in the basement? Maybe, right? They're coming home. So now you're 60 years old, 58 years old if you're the earliest boomer, and your kids may be living in the basement. Most often you've got a 4-bedroom town, maybe even a 5-bedroom home. Your kids have left 20 years ago. They've got their own families. They live in another state, and you're holding on to it because your kids might come back for the holidays. That's what Airbnb's for, guys. Get out of that 500,000, your 700,000, your $1 million, your $2 million house now, and get into the home you want. You're 58, your knees have started hurting. You don't want to go up down those stairs. And why are you in a 2,500, 3,500, 4,000 square foot home, heating it, cooling it, having cleaners in? You don't want that anymore, but you're scared to move because guess what? You got all your kids' stuff there and all your stuff that you've gathered. Get out as quickly as you can. We've still got that window. So those are the people I'm talking to. If you've had your house for a year, you probably paid more for it. So that's a whole other situation. But listen, we're agents, we're consultants. When we understand the economic cycle and how it works, we can consult with you in a whole other way at a much higher level. So guess what? As agents, we'll support you being a landlord too and renting it out. I do not want you to say, I'm going to rent my home for a year or two, because watch this, guys, it's 7 to 11 years. The trough statistically is 3.5 to 5.5 years. So what do you want to do? Rent it out for 5 years and then sell it? That doesn't make any sense. So if you want to rent it out, we'll help you, but hold on in your mind, think, okay, I'm going to be 70. Does my house work for me at Thanksgiving, Christmas, all the different holidays, Hanukkah, all the different holidays that are out there for 10 years? If it does, keep it. We'll help you, right? So become a landlord and rent it out if you can deal with that, but make sure you're looking at that 10-year cycle, because that's when your house is going to peak again and you can get all that money out of it like you can get out now, because most of our markets are still sort of flat and bumping along as people are learning. Or sell it now. We'll help you sell it too. So hold it for the price, but hold it for 10 years. Think about how old you are and does this house work for you and your family? Let's talk about buyers. What does this mean for you? Oh, I can't buy now because you're telling me we're going into a recession and the interest rates are high. Most people stay in the house for 7 to 10 years. That means it's going to be worth more than what you're buying it at. You're okay. Interest rates, I get it. They're high right now. We just had it staved off. And marry the house, date the interest rate. You can refinance like we all did when they went back down, and you'll be perfectly happy. And as long as you don't intend to buy the house for 2 or 3 years, or statistically, as we're looking here, 3.5 to 5.5 years, you're fine. Don't worry about it. Get in your house. Let's talk about rent. What's the average rent in your market, Marty? 2,000 a month?
At least.
Okay. Anybody else higher than 2,000 a month? Marianne, what's your average? Unmute yourself. If you can, click on your little microphone, or just put your fingers up like this. 2,500. 2,500. Okay, 2,500. I'm going to ask permission to use 2,000 because that's a fairly low rent for somebody that's looking to buy a house. And I'm a bit slow in the math department. So if you're going to wait to the trough as a buyer, that's statistically 3.5 to 5.5 years, right? 7.5 to 11.5 year cycle. Everybody with me? Put your hand up if you're with me to the trough. 3.5 to 5.5 years. So you're going to wait 3.5 years. What's 2,000 times 12? 24. Where's 24 times 3? 20, 40, 60, 4, 8, 12, $72,000. Half of that is 12, which means $84,000. By the time you get down to the trough, you are going to have paid $84,000 in rent to pay somebody else's mortgage. Raise your hand if you think $84,000 is a pretty good cushion in the house you've bought in case it drops $84,000. Raise your hand if you, do you see what I'm saying there? If you're a buyer and you're going to wait it out till prices really drop, you're going to have paid on average and even more $84,000 to someone else. Or wouldn't you rather have that $84,000 as a cushion? Worst case scenario, if prices drop. Are you all with me? Right? Does it make any sense to rent? It really doesn't. Are you sticking in your big fat house that you don't want to sell? Right? Same thing. If you're a buyer and you're sticking in your house and your kids have left home or your house doesn't suit you. I have a 50-year-old seller right now she has rheumatoid arthritis. She doesn't want to take the steps downstairs in a split level to do the laundry. Do I want that 50-year-old in 10 years' time when the next peak comes to have had 10 years going down those steps doing the laundry? Of course not. Let's get her out now and get her into a single level. Give me some questions. That was the fastest economic cycle outline ever.
I love it. That's the reason she's so smart. I love.
Who's got some questions? I use this with every seller, by the way, and buyers. Tell the truth. That's what people are looking for. Who's got questions? Who'd like to say the economic cycle isn't 7 to 11 years and we're just going to, house prices are just going to keep going up? And by the way, if you see this trend line here, this red line, that's the 2.5 to 5% that it rises every year. It does keep rising. People say, oh, my house has doubled since 2000. Of course it has, because this trend is 2.5 to 5, 2% to 5% over the long term. You're all welcome to this diagram, by the way. Just reach out, Rowena Patton. I'm all over the internet. Just find me. You can use it with your sellers. We use it in every listing presentation because people don't understand. Just know, think about yourself. We're at the peak, right? Euphoria. Oh my gosh, this is my pension. Denial. Oh, it's not happening. It's kind of where we're at now. Fear. A few people are in fear. If I don't sell now, what am I going to do? Gets towards that lower end, 2010, 2008, goes into panic. And then we're in depression. House prices are never going to come up. Oh my gosh, I can't believe it's gone down so much. And then we go into what we call expansion, right? We go into hope. Oh, I think house prices are coming back. This is awesome. Unless you're a buyer, you're like, oh crap, I better buy one quick. And then we get optimistic. Then we get excitement. Then we get into euphoria again. Because, oh my gosh, my house is worth a fortune. Isn't this amazing? It just keeps cycling, guys. And most agents have only been in the, let's be honest, a lot of agents have been in real estate for a year or two. And we know that 84% of agents disappear by year 5. How crazy is that? It's very sad. Learn the cycle. Buyers learn the cycle. Sellers learn the cycle. If you're an investor, of course, you want to buy in the trough. But guess what? You can buy at the peak too when you buy right. And we can help you with that. That's what we're here for. Give me some questions on the cycle. I want to hear some questions. Marianne's got one, I know. And Marianne, you can say phooey if you want.
I don't have one off the top of my head right now.
Okay. Do you agree in your market? Do you feel like you've peaked? Are you seeing the interest rate shifts? Are you seeing any price reductions coming in that you weren't seeing before in very low inventory?
No, I would have to say that I keep my attitude strong and look under different rocks. Okay. And I've been doing this since 2005.
Yeah.
So I saw the other shift.
Yeah.
It's not anything like that at all.
Yeah.
And I'm having a gangbuster year.
Fantastic. Which market are you in?
I'm in Savannah, Georgia.
Awesome. Okay. Savannah, Georgia rocks. You're a little warm there right now. I know it very well. I used to teach down there. Okay. You'll see this just playing out across the country. And the thing is, anyone can buy at any point. And when you really get your arms around this and what's happening in the shifting market, you can help buyers understand why it doesn't matter. Because if they're oh, I don't, if I sell my house, I'm not going to find. Is your inventory low, Marianne?
It's very low. We have,
okay.
it's less than a month worth of inventory on the market.
And I know the answer to this, but for people listening around the country, in Savannah, Georgia, you're having a lot of people moving into Savannah, Georgia, correct?
Absolutely,
Yeah.
especially as corporations are letting people work from anywhere.
Yes.
Savannah was just named the #1 city to move to in the Southeast.
Yay.
Not to mention Georgia.
Yep.
So it's actually a really very exciting time.
It really is. And the key thing is for your people are moving from New York, DC,
Chicago,
South
Ohio,
Carolina, Chicago, Ohio, Midwest, primarily.
California, yes.
Florida, California. We're all getting the Californians, right? Because they have the biggest deficit of moving out of their state. Those people are a little scared to move because what if they can't find something in Savannah? This is happening in all of our markets. Most markets are 60% people moving in. So they're worried about selling their home, which is going to go very fast in their market, maybe, if they're pricing it right and doing everything else, to what if they can't find something in Georgia? And that's where we come in as agents to help them understand that you put the right offer in, then it's not going to be a problem. And you know, really teaching our sellers in Savannah and everywhere else that, listen, it's okay. We can get you that seller possession after closing. Do you do that, Marianne, in your market? You do seller possession after closing. A lot of sellers don't know that because a lot of agents are new and don't know how to get creative and help people in the shifting market. You were in this shifting market in 2005, so you understand there's very few agents, those of us with gray hair. You can't see the gray hair, can you? You can't see any of our gray hair.
None of mine either.
Understand that markets shift and it doesn't matter what time you're buying or selling. You just got to get creative with it. Any other questions on the shift?
Yeah, let me do this, Rowena, and then we'll stop at the end and ask any other questions. Just quickly, I'm going to ask Dave to put up
Let me stop sharing.
number 5. That's my little scale here that shows about what's happening in Wake County. Wake County, by the way, is the largest county in North Carolina. It's huge. It would take you about an hour and a half to get from one end to the other end. And so this is a graph that I've kept over the years. So it's my own little economic cycle of what's happening in our market. Now, this is just for Wake County. And when you look at it, of course, you'll see that the market peaks in June every year. But look down at the bottom, because that is the trough, what you're talking about, 2010. And going up to the peak, and the actual peak in our market was a little bit before 2023. So it was probably mid-year last year, early last year. But what's interesting, if you go to the one that I also keep, which is number 4 slide, Dave, this is all of TMLS. And what's really changed in our market is the growth outside of Wake County, because now we service about 7 or 8 different counties. And really what I want you to notice is way back down in 2006, that year, the market peaked same as usual in June, and we had 3,894 sales. That was in the whole MLS. When we peaked last year in June of 2022, we had, can I read this? It's actually 58 or 5897. We gained almost 2,000 sales, and that was because of population growth.
Yes.
And so that's been huge for us here in that area.
But Marti, talk about mood. So this is the other thing that happens when this is going on. I just realized 101 didn't turn my speaker off my phone. So here's the other issue. What happens when prices are rising, and I think we can all put our hands up and say this, is that people move out, because in boondogs, anywhere you get closer out from a main city, prices go down, and it becomes more affordable. And
people move out, realtors build out.
Yes. And wages haven't gone up, right? Or certainly haven't gone up 30% since 2007. Just look at all the reports. They might have gone up a little bit, but most people don't earn that much more. So how on earth can they afford a house that's doubled in price? So of course they move out, right? So that your figures are correlating everything we're saying. And
They are.
2010 showing the
And
drop, same
I've
thing.
lived them. I've lived
Yeah.
those cycles, and I know you have too. But it's interesting because I just read something that talked about, we were talking just a few minutes ago about the overheated market. I don't know about you, but 18 months ago, it was an overheated market.
Yeah.
People were making offers. It was really, you could pick a price out of the air and sell your house for that price almost. And somebody probably overbid it and give you $100,000 due diligence. But if you look at number one on my slides, Dave, and they call these years that are really out of alignment with a normal year. And Rowena, I've been selling real estate twice as long as you. And we used to tell everyone when they bought a house, the first thing we told them is you need to own that house for 3 to 5 years before your home will appreciate to pay for what we're going to charge you when we sell that house. And that was just the way we told people, you have to live there for 3 to 5 years. The traffic, actually, when it started to slow, which was mid last year in Wake County, the traffic goes down. And of course, that leads you to slide number 2, which I talk about on slide number 2. I talk about the annual appreciation. Now, these are national figures, but if you look at annual appreciation of a home in 2017, we were doing great, but prices weren't out of line. It was 7%. It was 5% the next year. The year of COVID, we gained house equity of 11%. And then in 21, it went up, just 18%. Did your stocks go up 18%? And did anything else in life go up 18%?
So the key is timing it that 2 years before the peak.
Yeah.
And we know what the peak is because it's 7 to 11. Or if the peak's been extended, it's all about risk and reward. And that's about what your financial advisor would tell you. It's the same thing. If you know it's going to peak at 7 years, right? If that's the earliest it will peak, then if I were at 7 years, I would sell it and get my money out. Or if you're conservative, you'd sell it at 11. If you're like, oh, okay, I'll take the risk, it's somewhere between 7 and 11. And that's the 2 years before the peak, which is exactly what's happened. What we'll see on your chart, Marti, is if you could roll this out, with a crystal ball, 2023, 2024, 2025, you'll see some, below the line where we drop. We're not appreciating, we're depreciating.
Absolutely.
And it's 2.5 to 5.5 to 5% every year when you level it out across the appreciation. So keep your home for 3 years, depends on where you're at in the cycle. Right now, it's keep your house for a minimum of 7 years, which most people do. So it's not scary. That's the whole thing for a buyer. If you're going to keep it for 7, it's going to be worth more, most likely, than it's worth now. And you're not paying that $84,000 in rent. Or you're not in a house that really doesn't suit you anymore, which is the whole point you're moving in the first place, to be by the grandkids or not.
Here's the thing I would say in advising people about real estate, I'd be just like your stockbroker. You know what? It's the consistency that does it in real estate, just like it's the consistency in stock. If you consistently invest in great stocks, you're gonna do well over the long. It's a long play. It's not a short play. And if you try to time the market, I find danger in that. I think real estate is a great long-term investment. It always will be a great long-term investment. So
can I build on that, Marti, a little bit for investors?
Sure.
So for investors, I'd say, for example, I can give personal experience of this. When you have a great agent, or if you're a great researcher and can do it yourself, you can find a home in a neighborhood that has an unfinished basement. For example, here's one example. You can pick up an unfinished home in a neighborhood where the exact same cookie cutter home next door. I just did this, sold for $200,000 more. You can finish the basement. We're at the high, right? So you can buy it at $425, sell it at $650. But for finishing out that basement because the one across the street did. Now, and that's at the height of the market. So That's about us as agents understanding how we do the research on homes and find those homes for the investors. They are out there. I just did it.
That's awesome. That's awesome. Guys, I'm going to close it up. We could talk about this all day long. If you have any last questions, we'll hang around for about a minute or so. Any closing thoughts, any closing questions that you have, I'd love to hear from you. Thank you for stopping by. Now you know why I'm so crazy about Rowena Patton.
And I'm crazy about you, darling. I met this, one of the first times we really connected is when we were in Dallas. And I said, you know what? We were at a seminar for days and I was getting a bit bored. And I said, you know what? I've always wanted to go to Dallas. And Marti said, me too. And we've got great pictures of us in big cowboy hats having visited Dallas. So that's when we really connected many years ago.
That's good. It's also the home of Neiman Marcus, which it wasn't a bad choice either. But this is interesting. I love the topic of economic cycles. I think one of the reasons I love Wake County in this area is because we're the seat of state government. We've got the Research Triangle Park. We are insulated to a certain respect from the downturn, but not totally, because I remember thinking in 2006, oh, the rest of the world is falling apart, but we're staying so steady. And sadly, the faucet was turned off mid-2007 in our market, and we did go down to that trough, and we've come back really, really strong. Also, I would say a note too, some people believe that economics that are fluctuate because of political events, and next year is an election year, and a lot of people believe that the person in power, that the party in power pressures the Fed to keep the economy flowing. So they want lots of action so that everybody thinks we got a great economy. So that might happen. It might not happen, but it's something to know about. So guys, thanks for stopping by. Any further questions? If not.
Rowena, there's a couple questions in the chat. If you can check those out.
Oh, okay. Will do. I have to put my glasses on. Chat, let's have a look. Do you see home prices dropping in the next year? Date the rate, marry the house. Exactly. So that's Rob. Thank you for that question, Rob. Yes, I do. I'm already seeing them in my market. Again, Marti and my market, even though we're in the same state, are very different. I'm a little market. Everybody in Asheville, by the way, Asheville's very well known, blah, blah, blah. We have so many people moving in, and everybody thought we were protected. We weren't. We went down pretty much the same as everywhere else. By the way, part of Los Angeles, Beverly Hills, Manhattan, Nevada were actually not Nevada. There were very few places protected last time around. There's very few places in the country that aren't hit. They all are. We all think they won't be. They are. It's natural. It's an economic cycle. What about real estate being local? Absolutely. Maybe RDU will behave differently. Well, you just heard what Marti said about that. We all thought it wouldn't, because all the agents in the market say, oh, it won't happen here. I think that's the wrong thing to say to our buyers and sellers. Just tell the truth about economic cycles. Marti went down about 29%. Last time around. We went down about 32%, which, by the way, was the average nationwide. So no, I don't. Yes, it is local. You're absolutely right. The economic cycle is not. When the rate goes up and things become overinflated, only so many people can afford those houses. So I agree with you. It is local. Everything else we do, CMAs, everything else, it's block to block, street to street. Totally understand. Rowena, Rob said, what is your UVP? I happen to have written a book about that called Find Your Unique Value Proposition that went bestseller first day. That has a whole series of programs in it. I didn't pay him to ask that, I promise. My UVP is I have a series of programs. You can see them at allstarcertifiedprograms.com. We do certified pre-owned, which is cpoexperts.com. We do the love it or leave it guarantee. That's for all the people that are moving in from elsewhere. And, that allows them to move out of the house sales free. We do 12 other programs that they're all in the book, or just call me. I'll share all of them with you. They're all in the book, so you can copy them easily. And I do lots of coaching on that too. So thank you, Marti. That was awesome. I so appreciate your experience. You're my mentor. I love you. You're an amazing lady. And thanks everybody else for listening today.
Thanks for stopping by. Take care, Rose. See you soon, darling. Take care.